Chair Gensler, thank you very much for joining me, and a very happy birthday to you. You're, of course,
thank you so much.
Working on this birthday. The rule proposed today deals with volume-based discounts that exchanges offer to broker-dealers. You say this rule would help enable more competition in this market. But something that was raised at this open meeting was the idea of the timeline and sequencing with the other equity market structure proposals that the SEC has already made. How do you see the timing working out with all these different rules here?
Well, first, thank you for the birthday wishes. And I am working because I love the job. My identical twin brother, he's at the beach. So, but in terms of these, this proposal today, this is trying to level some of the playing field between and amongst brokers, because stock exchanges today are offering different fee packages through these rebates so that the mid-sized brokers and the smaller brokers, in essence, pay higher net fees. So that's what this proposal is. You're right. We made some proposals last December addressing 4 specific areas, and we've gotten good public feedback on that, and the staff is working on possible recommendations for the Commission to consider on each of those prior proposals.
On the pace of that work, though, again, coming to the timeline and sequencing question, can you give us an idea of how close that work is to being done?
2 things. One is we don't do things against a clock. It's really about the staff work and feeding things up to our 5-member commission. And then we sometimes have discussions and negotiations even and compromises amongst the 5 of us. But when you look at what we've been doing over the last few years, it generally is somewhere between 12 and 24 months between a proposal and adoption, generally somewhere in the middle of that. I can't think of the last ones we've done are sort of 15 to 19 months. But again, it's not against a clock. It's really getting all the feedback, thinking through the economics, thinking through the legal authorities, and most importantly, what goal are we seeking? So in the equity markets, we were trying to help promote competition and efficiency, basically for those individual investors in the market, getting a better pricing in the market, and of course helping issuers that are issuing, the public companies.
Another rule that's been proposed relates to climate disclosures and potentially scope 1, 2, and 3 emissions. You received a letter from a number of California members of Congress, Democrats, last week, who suggested you should be following California's footsteps. They, of course, just passed legislation that a company with more than $1 billion in revenue has to disclose scope 1, 2, and 3 emissions. Do they have a point? Is what California is doing going to set a precedent for the SEC or potentially make it more complicated from a compliance standpoint if the SEC doesn't pursue scope 3 as well?
I appreciate the letter. It's part of our robust comment file. Members of Congress and the public have commented. We have a different role than the legislators in California. Our role, we're not a climate regulator. We're not a climate agency. In essence, we're an agency that's climate risk neutral. It's about disclosure to the public investors. So you're an investor, and do you find this climate risk information relevant to your investment decisions? And what we know is, just looking back to 2021, 2 years ago, over half of the largest companies, over half of the Russell 1000 are already making disclosures around their greenhouse gas emissions. To use the terms you use, scope 1 and scope 2. Far fewer are making disclosures around so-called scope 3. If the California law, what's now been signed, so that changes some of the economics. It means more companies will be making these disclosures in a few years. And so that does affect when we think through the economics of anything we're doing.
In addition to receiving that letter last week, something else that happened last week, or rather didn't happen, was the SEC acting to appeal a court ruling from August in the Grayscale case. Grayscale, of course, trying to convert GBTC into a spot ETF. I know you can't comment on ongoing litigation, but should we still be considering that ongoing litigation given that lack of appeal at this point? And if not, what happens next?
Wait, didn't you just say that you knew I wasn't wasn't going to comment on the litigation, but let me just say.
But is it still ongoing since you didn't appeal?
We didn't appeal last Friday. I think that's accurate.
So you could still in the future in another form.
But what we have in front of us, just so that the viewing public understands, we have not one, but multiple, I think it's 8 or 10 filings that the staff and ultimately the commission is considering for what's called exchange-traded products, for Bitcoin to be in a security. So the Bitcoin would be held, and then there would be something called an exchange-traded product, and that would trade on various stock exchanges. And those filings are in front of us. I can't prejudge any one of them, but there's 8 or 10 that we're looking at.
Well, there is a large number, and there is kind of a narrative in this market, and I wonder if you could put it to rest, that someone's going to get to go first. Is that likely to happen, or is it likely to be a group approval? If you're going to have one, a bunch of products could be approved at the same time.
Again, I'm not going to prejudge. The staff's doing work on those multiple filings, but it's also about those companies are issuers. See, when a company is actually, or an asset manager is seeking to take something public, these exchange-traded products need to register with the SEC, and they go through a filing somewhat similar to going public, like an IPO. And so it's really the work of our Division of Corporation Finance that gives feedback. Our Division of Trading and Markets, of course, looks at the filings of the exchanges.
Well, and we know the issuers have had interaction with the staff, questions the staff has asked that issuers have tried to address. Do you have a sense at all of whether or not the attempts to address those questions and issues have been productive, fruitful, changed anything?
Again, this is a time-tested process that goes back decades. It's like the staff of the SEC, it's called the Disclosure Review Team, but in that group, they respond and give feedback to potential issuers. But I don't have any details on those individual conversations.
All right, Chair Gensler, thank you very much for joining us on Bloomberg Television. We appreciate your time. And again, happy birthday.